Hello Wolfpack. Now you guys know my opinion on Bitcoin in regards to the S&P 500. I don't think that Bitcoin and the S&P 500 and the rest of the traditional markets will bottom out at the same time. I think that Bitcoin will bottom out before the rest of the traditional markets. The evidence for that is, in my opinion, fundamentally very clear. But I want to bring up a video by Anthony Pompliano quickly and we'll take a look at that and then we can get into why I think that and what this video means in terms of supporting my opinion. Let's get into it.
Not least, Bitcoin's volatility is near all-time lows, which is in direct opposition to the mainstream talking points. We can see that Bitcoin's historical volatility index dropping near those all-time lows. Next, we can see that Bitcoin's volatility compared to equity volatility is near an all-time low. Then, Bitcoin's 10-day realized volatility compared to the Dow Jones also setting new lows. Next, Bitcoin compared to the Treasury Market Volatility Index also hitting all-time lows. And lastly, Bitcoin options market pricing in low volatility with implied volatility across the spectrum approaching annual lows.
So he made a few points there, okay? And they're not his points, by the way. This is macro evidence. I could have found the charts for this. But I decided to just put in that video format because he outlined it very clearly and very quickly. And shout out to Anthony Pompliano for doing that. But essentially the points that were made there is that Bitcoin is dramatic. In fact, it's historically speaking, the least volatile it has ever been on historical on-chain record in regards to the traditional markets in basically all occasions, right? So Bitcoin, very, very, very unvolatile right now in regards to traditional markets. Now, everyone thinks Bitcoin's a really volatile asset. Guess what? As of right now, as you just saw, Bitcoin is actually less volatile than some of the traditional markets right now. Now, what does this indicate? Okay, because it's pretty interesting. It's like, well, why is Bitcoin so like risk-free right now? Why is it so, I don't know what the word is, unvolatile? That's not even a word, but I'm just going to say it for now because I can't think of the word for it. You know, why? Well, it's because we're seeing what I've described happening. We're seeing what I've described in terms of Bitcoin bottoming out before the traditional markets start to happen. Bitcoin is distancing itself on a correlation coefficient from traditional markets. And this is the present in previous videos I've done. I've analyzed this before. The correlation coefficient between Bitcoin and traditional markets is usually 0.7. As of right now, it's getting less and less and less. Bitcoin's moving further and further away from traditional markets in terms of correlation, right? So it's less likely at this point in time. Ever since June, this has been happening. It's become less and less likely, basically by the week, for Bitcoin to do what the traditional markets do. And if we look at the charts, the main two charts, S&P 500, what has it done? It's moved down in a downward trend, so has Bitcoin. But the S&P found a bottom here in June. It saw a massive rally all the way in August, up past its peak from April basically, and now it's dropped down. It's gone below its June low. Bitcoin saw nothing like that, right? Bitcoin saw a bottom in June. Yes, it did see a rally in August, but that August didn't take us back to the April high. The April high was up here at 48k. Bitcoin only went to 25k. And guess what? It hasn't come down. It hasn't lost the June low like the S&P 500 has done. This correlation between Bitcoin and the traditional markets is weakening. Bitcoin is becoming more and more independent, and this is what you generally see before a major move. This is the exact same thing we saw happen in November. In November last year, the exact same thing happened, and I was covering it as it was happening, and it was one of the reasons why I said the top was in. Bitcoin was not following what the traditional markets were doing. The traditional markets, yes, they came up in November, we're in the same region, but no, Bitcoin actually topped out in November, right? And it started dumping massively. And by the time the traditional markets had topped out, Bitcoin was down 40%. The same thing is happening now. Bitcoin is distancing itself from the traditional markets and it's acting more alone. This is what happens before a major turning in the 4-year cycle theory. Let me show you a chart. As the 4-year cycle theory, which is a date range trend on Bitcoin that's been stemming from the first halving in 2012, comes close to the date in which it's predicting the top, Bitcoin distances itself from traditional markets. It happened in November. As it gets close to the date in which we're predicting the bottom for the 4-year cycle theory, Bitcoin once again distances itself from the traditional markets. We are saying the same thing happening right now that we saw in November, and that is reason, in my opinion, to believe, on top of the already pretty much abundant evidence, that Bitcoin will bottom out not only in Q4, but probably above that 17.6k level. And by that, I mean, we'll come down, we'll retest it, we might drop below it briefly, within a weekly candle, but ultimately we'll come back up and we'll have bottomed there. That is what this is suggesting right now, right? Now, look, my overall prediction, as per the 4-year cycle theory, is a Q4 bottom. I don't care what price we're at, but it would be ignorant of me to say at this point that there isn't a decent amount of evidence pointing for a bottom around that 17K level, because that's what it's pointing at, right? The fact that Bitcoin chooses to distance itself from the traditional markets right now in Q4 as per the 4-year cycle, while the traditional markets still look like they need to go down for a lot more, probably means that, hey, guess what? The traditional markets probably will go down for a lot more and will go down into next year, but Bitcoin will probably bottom out just like what we saw in the end of last year when Bitcoin topped in November and the traditional markets topped in January. I would expect Bitcoin to bottom out in Q4 still. I'm still standing by that, and this is some more evidence for it. So that's the video, guys. Thanks for watching. Hope you enjoyed. Catch you in the next one. Cheers. I want to briefly interrupt this video to talk about the BitGet Exchange. Now, the BitGet Exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Megaworld Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks, guys, for watching the advertisements. Let's get back into the video.